Hey there. Let's dive into the latest buzz from the financial world, shall we? Welcome to Whiteboard Invest, your #1 go-to source for clear and concise investing knowledge explanation and news updating daily. Hey crypto fam! Welcome back to the channel for your daily dose of crypto news. Buckle up because today's a wild ride. First up, Ethereum co-founder Joseph Lubin throws shade at the SEC, claiming they're blocking Ethereum's path to mainstream adoption. Spicy stuff. Next, we've got Bitcoin price analysis. Gotta stay on top of that. Meanwhile, Hong Kong's making a move to cozy up with Saudi Arabia by creating an ETF for the Tadawul exchange. Global crypto love, right? Speaking of shady accusations, DWF Labs is firing back at rumors of a massive wash trading scheme on Binance. Drama alert. And Ethereum's back to being a little more inflationary after the Dencun upgrade. Don't worry, we'll break it down for you. Oh, and don't forget, Binance got slapped with a $6 million CAD fine by the Canadian financial regulator for some alleged money laundering violations. Ouch. Finally, Marathon Digital is raking in the dough, mining a whopping $176 million in Bitcoin with a crazy 184% profit jump in Q1. Boom! That's all for today's crypto news. Stay tuned for more and smash that subscribe button for all the latest crypto scoops. So picture this. Joseph Lubin, the guy who helped kickstart Ethereum, is pretty convinced that the SEC is up to something sneaky. He's like, hey, they're trying to keep a tight leash on Ethereum, making it tough for us to get cozy with the traditional finance crowd. At this crypto shindig in London, Lubin's spilling the beans about how Consensus, his outfit, decided to take the SEC to court after they got this ominous Wells notice. He's all, we didn't see it coming. They just slapped the security label on Ethereum without telling anyone. Instead of chatting with us and setting clear rules, they're playing the enforcement card. And get this, Consensus isn't just sitting back. They've launched a legal battle in Texas because they think the SEC's move could spell trouble for everyone in the crypto biz. Lubin's also worried about the bigger picture. He's saying, if the SEC gets their way, it's not just us crypto folks who'll be in a bind. It could throw a wrench in the whole U.S. tech scene. He's got an eye on the future too, especially with the SEC about to decide on Ether ETFs. He thinks they're jittery about banks and financial institutions watching their clients shift their stash into digital digs through DeFi projects. Wrapping up, Lubin's shaking his head over the SEC's claims about wallets like Coinbase and MetaMask acting as brokers. It's a wacky idea, he says. If they push this through, it's going to set a risky precedent that could shake up the entire industry. So there you have it. Lubin's chat makes it clear that the SEC's moves are not just a thorn in Ethereum's side, but could also reshape the tech and crypto landscape in the US big time. Before we dive into today's next market-breaking news, make sure you hit the like button and subscribe to our channel to fuel us up for even hotter content than ever. Hey guys, it's your crypto buddy here, and today we're diving into the world of Bitcoin to see what's been happening over the past few days and what we can expect moving forward. So, let's get to it. Bitcoin has been on a bit of a roller coaster ride lately, with prices dipping below $60,000 before bouncing back up to around $62,800 today. This volatility is pretty normal for Bitcoin, but it can still be nerve-wracking for investors. Over the past 3 days, we've seen a bit of a mixed bag. Prices started to decline on Tuesday, reaching a low of $60,687 on Wednesday. However, they quickly recovered and have been trending upwards ever since. Today, Bitcoin hit a high of $62,807 before pulling back slightly. So, what's causing this volatility? There are a few factors at play. First, the overall stock market has been volatile lately, and Bitcoin often moves in tandem with stocks. Second, there's been some uncertainty around the U.S. Federal Reserve's plans to raise interest rates, which could make riskier assets like Bitcoin less attractive. Despite the short-term volatility, I'm still bullish on Bitcoin in the long term. I believe that Bitcoin has the potential to become a major store of value and a global medium of exchange. And while there may be some bumps along the way, I think Bitcoin is here to stay. Of course, I'm not a financial advisor, so this is not financial advice. Do your own research and make your own decisions. But if you're looking for a long-term investment with the potential for high returns, I think Bitcoin is worth considering. As for today, I'm cautiously optimistic. Prices seem to be stabilizing, and I could see Bitcoin breaking out above $63,000 in the near future. However, I'm also keeping an eye on the stock market and the Fed, as those could still have a significant impact on Bitcoin prices. So, what do you think? Are you bullish or bearish on Bitcoin? Let me know in the comments below. And remember, if you have any questions about Bitcoin or other cryptocurrencies, I'm always happy to help. Just leave a comment below or reach out to me on social media. Michael Wong Wai Lun, Hong Kong's Deputy Financial Secretary, just dropped some exciting news. They're cooking up this new ETF that's going to follow Hong Kong's stock market, like a hawk. And guess what? They're planning to list it all the way over in Riyadh on the Tadawul exchange. It's like they're rolling out the red carpet for investors from the Middle East to dive into the bustling markets of China and Hong Kong. So, here's the scoop. Hong Kong and Saudi Arabia are joining forces, shaking hands on creating more ways for investors to splash their cash in each other's backyards. This was all the buzz at the Saudi Tadawul Group's big finance bash in Hong Kong. Wong's pretty stoked about it. He's like, "We've got a bunch of financial bigwigs on board for this ETF gig." He's convinced it's going to pump up the volume on cash flowing both ways. And it's not just a one-hit wonder. This new ETF is going to be buddies with the CSOP Saudi Arabia ETF that's already strutting its stuff in Hong Kong, tracking 56 Middle Eastern stocks, including the heavyweight champ, Saudi Aramco. That baby's been on a roll, flexing a 9.2% gain, and even outdoing the Hang Seng Index. Naif Saleh Al Athel from the Saudi Tadawul Group is also jazzed about the idea. He's hinting that we might see more ETFs popping up, like a financial whack-a-mole, in both Riyadh and Hong Kong. And there's more. Since Hong Kong's head honcho John Lee Ka-chiu waltzed into the kingdom back in February 2023, it's been deal after deal. HKEX and Tadawul are now BFFs, working on fintech, cross-listings, and making sure companies are playing nice with the environment and society. Even the bigwigs at Hong Kong's Monetary Authority and the Saudi Central Bank are getting cozy. Christina Choi from the SFC is already planning a trip to the Persian Gulf, and she's not just going for the falafel. She's talking about how Hong Kong's asset managers are eyeing the Saudi market like it's the next big thing for collabs and fund distribution. She's all about mixing it up, saying, "Let's get Hong Kong's financial wizards to whip up some new products with a little help from Saudi's local talent." It's all about giving and taking, with more Hong Kong financial magic showing up in the kingdom. The groundwork's solid, too. Hong Kong's Justice Department and Saudi's Ministry of Justice are now handshake buddies, ready to smooth out any legal wrinkles. Even Cathay Pacific's getting in on the action, planning to zip people directly between the two cities by the end of the year. And the cherry on top? Hong Kong and Saudi Arabia are hashing out a deal to protect and boost investments, and Hong Kong's even setting up shop with an economic and trade office in Riyadh. Wong's wrapping it up with a toast to a long and prosperous friendship between Hong Kong and Saudi Arabia. It's like they're planning to grow old together. This whole shindig in Hong Kong is just the start. Next year, the Tadawuls throwing their own party in Riyadh, and it's going to be all about hooking up investors and businesses from China, Hong Kong, and the Middle East. Bonnie Chan from HKEX is already dreaming big, talking about how China and Saudi Arabia are shaking things up with their economic glow-ups. She's spotting opportunities everywhere, from telecoms to tech in Saudi Arabia, and she's not missing out on China's growing middle class that's hungry for new investment options. So, there you have it. It's like a financial friendship bracelet being tied between Hong Kong and Saudi Arabia, and it's set to sparkle for years to come. Let's chat about this whole Binance and DWF Labs drama that's been unfolding. So, the word on the street, or rather the Wall Street Journal, is that Binance's top-notch sleuths, who were brought on board in 2022, stumbled upon what looked like some shady business. They were convinced that DWF Labs was playing the system, with a cool $300 million in wash trading last year. That's like selling to yourself to make it look like there's a party when it's just you alone at home. DWF Labs, on the other hand, is shaking their head at this. They're on their Telegram channel, calling these accusations a bunch of hot air and saying, it's not how they roll at all. Now here's where it gets spicy. These investigators were so sure of the funny business that they suggested giving the boot to a bunch of users, including DWF Labs, for messing with the YGG token and a few others. But Binance, after doing a bit of digging into the investigators' homework, decided there wasn't enough proof. And just like that, a week later the head of the surveillance squad was out of a job, and DWF Labs was still in the game. Binance is standing firm, telling everyone that their market watch is top tier, and they don't let any market manipulation slide. They even said they've shown nearly 355,000 users the door for breaking the rules over the last 3 years. And to add another layer to this onion, there's talk that DWF Labs was offering clients a way to pump up their token prices and make it look like there's a buzz when there might not be. Binance is like, we had no clue about these docs, but if it's true, we're not cool with it. So, there you have it. It's a classic tale of he said, she said with a crypto twist. Binance is trying to keep its house clean, while DWF Labs is trying to clear its name. And all of us are just trying to keep up with the plot twists. Hey, let's talk about Ethereum's latest update, Denken, and how it's shaken things up a bit. So, Denken came along and was like a breath of fresh air for fees, cutting them down by 4 times on average. Pretty sweet, right? But here's the kicker. With fees taking a nosedive, the amount of ETH getting burned went down too. And just like that, Ethereum's rep as a deflationary asset was flipped on its head. Before we dive deeper, let's rewind to the 2022 merge. That was when Ethereum switched from proof of work to proof of stake, and it started burning a chunk of transaction fees, which was like putting ETH on a diet, making it slimmer, aka deflationary. But then Denken strutted in with its dank sharding swagger, making block storage more efficient and Layer 2 networks cheaper, which is great for scaling but threw a wrench in the whole burning mechanism. So, what's the damage? Post-merge, ETH's supply was on a downward trend, dropping from 120.491 million to 120.097 million. But post-Denken, we've seen an uptick of 400,000 tokens since April. It's like ETH has been hitting the gym less and started growing again. In a nutshell, while Denken's been a champ for reducing costs, it's also turned Ethereum's deflationary trend on its head, making it more inflationary than a balloon at a birthday party. And that's the story of how Ethereum's Denken upgrade is a game of give and take. Easier on the wallet, but a bit heavier on the supply. So, let's chat about Binance getting a bit of a slap on the wrist from Canada's financial watchdog, FinTrack. They've been hit with a 6 million CAD fine. That's about 4.4 million USD for those keeping score. Why? Well, it turns out Binance kinda skipped a couple of steps. They didn't register as a foreign money services business, and they missed reporting a big virtual currency transaction, over $10,000 in a single trade. Oops. FinTrack wasn't just counting 1 or 2 oopsies. They found this happened a whopping 5,902 times between June 2021 and July 2023. That's a lot of missed calls. And on May 7, 2024, they said, "Enough's enough," and handed down that hefty fine. But wait, there's more. The U.S. Department of Justice also had their eyes on Binance. They were talking about a $4 billion plea deal to settle some alleged money laundering and fraud issues. And the cherry on top? Binance's CEO at the time, Changpeng CZ Zhao, had to step down and even spent 4 months behind bars after pleading guilty to some anti-money laundering sanction violations. So yeah, it's been a rough ride for Binance. They're learning the hard way that playing fast and loose with financial regulations can lead to some serious consequences. And it's a reminder for everyone in the crypto world that the rules are there for a reason. Now, let's chat about Marathon Digital's rockstar performance in the first quarter of 2024. So, they've been super busy mining a whopping 2,111 bitcoins. Can you believe that's worth around $176 million? Talk about a jackpot. And get this, their net income? It shot up by a massive 184% compared to last year's first quarter. With Bitcoin prices hitting the roof, their profits soared to $337.2 million. That's not just a little jump. We're talking a 223% revenue boost from the same time in 2023. They're not just sitting on this success, though. They've got big plans. With all the new gear from their latest shopping spree, acquisitions and stuff, they're aiming for a mind-blowing 50 exahash of hash rate by the end of 2024. And with a cool $1.6 billion in the bank, including some shiny bitcoins, they're pretty much set. But here's the kicker. They actually sold about 26% of their Bitcoin stash to keep the lights on. Operating costs, And while we're on the topic, the whole Bitcoin mining game just got a tad easier. The difficulty dropped by 5.7%, the biggest dip in a year and a half. Oh, and if you're wondering about their stock, it's chilling at $19.65 after hours, according to the folks over at Yahoo Finance. So, yeah, Marathon Digital is definitely on a roll, and it looks like they're just getting started.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.